The new Black Wall Street. Do it right, build wealth, live life. Economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. He's your host.
All right, my beautiful people, thanks so much for tuning in. This is ERGJ, your certified financial educator, founder of the New Black Wall Street. We're back here with our New Black Wall Street, the Money and Power Show. So hopefully everybody's doing well on this wonderful Thursday as we move into the market on March 30th, 2017. Now, the Money and Power Show, what is it all about? Well, I believe there's two specific areas that we've been taught in the Black community not to talk about. It's called taboo topics or taboo subjects. Now, we got quite a few of them. One is religion. We're told not to talk about religion, but the other two are economics or money, and then also politics. So everybody that's watching right now, I want you to put in the comments below cash flow and cash rules. That's right, cash flow and cash rules, because that's exactly what economics and politics are. Economics is the cash flow. See, the thing about cash flow is that it's supposed to flow. It's supposed to be a stream. So money should not just come to you. It should actually go through you. Money should always be moving. And as you may know, money never sleeps. Well, that's the cash flow. If you think about a stream, it moves down, it flows, the water flows, but there are restrictions to where it can actually go on the outside. That's the banks of the river. Well, those banks or those restrictions are what we call legislation or cash rules. So you have the flow of money, and then you have the law or the rule of money, which is obviously, like I said, politics. So there's two areas that we specifically talk about when we come on this show. It's going to be economics and then also politics, because once you learn how to earn and then you learn how to make your money work for you, and you want to always learn how to keep as much money as you make as well, because it's not what you make, it's what you keep. And the way that you keep more of your money is by learning a little bit about politics. Well, today's episode of the Money and Power Show is brought to you by True Detergent. True Detergent, black-owned and manufactured, and also black distributed. This here is your brand, your staple brand here, a 101 ounce bottle, 4 times concentrated, HE certified, halal certified, no animal byproducts or tested in this bottle here. It is safe. It is safe for sensitive skin. True Detergent. Now here's the deal. Clothes anyway. That's right. You're going to wash your clothes anyway. The question is, are you going to practice what you preach by circulating your dollar right back within your very own community and making the switch to True? True Detergent, 101 ounce bottle, $15 for the bottle. That's 15 cents per wash. Make the switch. True Detergent, make the switch. Now, I also want to make you aware of a couple things that are coming up. Actually, there's one thing I want to make you aware of from ERGJ Enterprises. We're going to be teaching a class on how to buy stock for your kids. That's right, how to buy stock for your kids. Now, here's the deal, guys. At the end of the day, many of us know that we should put our children in a position that we can help them learn early what we learn late. Well, the problem is that many of us are only interested in allowing our kids to learn what we learn early, or learn early what we learn late. So many people are interested in building wealth. They're interested in allowing their children to learn what they do not know. But how many of you are committed? See, here's where commitment and interest changes, right? Interest shows up in conversation. Commitment shows up in behavior. So many people will hit a like button. So many people will hit a share button. But how many people hit the register button? Let me repeat that again. Many people will hit the like button. A whole bunch of people will hit the share button. But how many people hit the register button? See, at some point in the Black community, we have to stop talking about wealth and start being about wealth, which is doing the things that wealthy people do. And the number one thing that wealthy people do is learn. That's right. When I go into a mansion, the first thing that I see when I move to the left is a study. See, rich people have big libraries. Poor people have big TVs. And at some point, you got to move beyond interest. You cannot just be interested in building wealth. You cannot just be interested in group economics. You cannot just be interested in building the Black economy. You must be committed, and your commitment doesn't show up in your talk. It doesn't show up in your likes. It doesn't show up in your moral support. It shows up in your behavior. What are you going to do different that's going to align with your particular speech, that you have coming out. Hey, what's going on, Kenyatta? Thanks so much for joining on. Bacon Bits is in the building. Bacon Bits is committed. That's right. She's decided to do something different, not just talk about something different, but do something different. And so you get the true detergent from us as well, or you can go ahead and sign your children up, sign yourself up to learn how you can buy stock for your kids. And if you don't know, Warren Buffett, who is now the third richest man in the world, he actually started investing when he was 11 years old. And my question is, why not your children? Why are your children not investing when they're 10, when they're 8, when they're 7? It's not that they don't have the ability. The problem is the parents do not have the knowledge, and they are only interested in building wealth instead of showing their commitment by hitting the register button. Well, guys, let's get into what we're going to talk about today. Good morning, Miss Wilson. How are you? Good morning, Club Millie in the building. If you are representing Club Millie, go ahead and put in the comments below hashtag Club Millie. For those that do not know what Club Millie is, it is the club where we are helping 1,000 people save and invest $1,000 this year. And the question is, are you going to be one of the 1,000? When you take 1,000, you multiply it times another 1,000. And if those 1,000 people practice group economics, in other words, instead of trying to go fast alone, they go far together, you will have $1 million of investable assets or cash that you have available to you. Now, what does that $1 million get you? Get you what you call leverage. When you have leverage, people, when you have capital, when you can walk into a building and say, I can buy what I want, then you have power. See, things don't change just because you demand it. Things don't change just because you rally. Things don't change just because you march. Things don't change just because you protest. What changes is hitting people where it hurts, and that is their pockets. So when you bring your money together, your capital together, your collective thought, and your group economics, that is when you're going to see change. Until that point, it's nothing but hot air. So what I try to teach you guys is to march with your money, to protest with your profits, and to rally with your revenue. Now, there's 4 pillars to Club Millie. All right, number 1, the investment club. We're going to be forming that in the next 6 weeks. So the thing is, hey, you want to be a part of that? You want to be a part of what you preach about? Well, then you want to go ahead and get signed up for Club Millie today. Investment club. Number 2, the real estate group, where we're going to buy our blocks back. That's right. We're going to stop gentrification. We're not talking about it. We're going to do it. Number 3, the peer-to-peer lending. We become our own bank. We don't ask for handouts. We finance our own freedom, our own projects, our own houses. And then number 4, venture capitalism, where we become our own Shark Tank, which means we help other small businesses become big. See what I'm saying? So here's the deal. Many people talk about group economics, but my question to you is, how many of them have a plan? Well, if you want to get with a group that has a plan to build wealth together, the investment club, to buy the block back or stop gentrification, the real estate group, to become our own bank, the peer-to-peer lending club, or to become our own Shark Tank, the venture capitalism firm, well, then Club Millie is just the place for you. Well, let's get right into what we need to talk about today. Somebody go and put that email address or that website in the bottom, who are part of Club Millie, so people can know where to go, because we got to get started with our show. Got to start with our show today. All right. So here you go, guys. Here's our market recap as we move into March 30th. See what happened yesterday. The Dow was down 42 points yesterday. The NASDAQ was up 22 points, and the S&P 500 was up 2 points. These are just different markets where money flows, right? Where cash flows. Target was up 2%. Macy's was up. So retail must have had a pretty decent day. Amazon was up 2.14%. I called Amazon 3 days ago. I told you guys, I think it was yesterday or 2 days ago, when they bought they bought some company in Soku or something like that in Saudi Arabia, the biggest online retail in Saudi Arabia. I mean, Amazon's trying to take over the world. I mean, my goodness, how many of you guys have Amazon cutting you a check? That's my question. I mean, why are we just helping them to become the richest, the most valuable company in the world, and we're not getting any of the profit? I don't understand it. I'm doing what I got to do. Hopefully you're doing what you got to do. Now, let's take a look at our key indicators as we move into today. Our commodities, oil is trading at $49.42 a barrel, gold at $12.49.20 an ounce, and silver $18.16 per ounce. Now, as far as our emotion that's driving the market, I want to remind you of this. Warren Buffett says this: there's two emotions that drive the market: fear and greed. Everybody put in the comments below: fear and greed. Let me go and put this website. I thought somebody was gonna type it for me. That's okay. I'll do all the hard work. So if you want to join Club Millie, just go to www.ergj.net, www.ergj.net. Now, there are two emotions that drive the market: fear and greed. Warren Buffett says this: to be fearful when other people are greedy, and to be greedy when other people are fearful. In other words, when you see extreme fear in the market, that's a great time to buy. Why? Because that typically means that the stock market or that particular sector is on sale. It's on clearance. It's like you walked up into your Nordstrom's, you went over to the clearance rack, and you saw all of these hot items for 2016 that nobody else wanted, and you bought all them things up on sale. It was like you can buy one, get one free. You can buy one, get three free. I mean, there's on sale. So right now we're sitting at a 34, which showing fear in the market. Not extreme fear, but fear nonetheless. And then we can also find probably a couple of sectors where that fear is more prevalent. So what are the leading sectors? What's hot over the past 3 months and what's not hot over the past 3 months? In other words, when we say hot, we're saying this is where people have been greedy. When we say not hot, we're saying this is where people have been fearful, or not people, particularly investors. That's what I'm talking about. I'm not just talking about regular people. I'm talking about investors. So where have investors been greedy? What's been hot over the past 3 months? Well, electronic technology has been hot. It's been performing at 11% over the past 3 months. What else has been hot over the past 3 months? Technology services has been hot over the past 3 months. It's brought back a 10% return. What else has been hot over the past 3 months? Consumer durables has been hot over the past 3 months, brought back a 10% return to those investors in those particular sectors. Well, what's not been hot? Well, what's not been hot is energy minerals. Energy minerals is going to be those energy companies, those coal companies, those oil companies, those companies that actually produce, mine, transport stuff that we actually have to use, which is energy. So what's not been hot? Energy minerals has been not hot over the past 3 months, trading under losing 10% over the past 3 months. And in another area that I haven't looked at just yet that has not been hot is communications. It's brought back a negative 3% over the past 3 months. Now, communications is a little tricky because I don't know. We were looking at this yesterday. We were saying, man, with all this competition in communications, is it leading us to a place of growth, or is it just stuck in the mud? I don't know. I got to do more research in communications, and probably I'm not looking at all of communications. Let's look at communications. Let's see what we're talking about. So communications is going to be in this sector. You got three different sectors. You got major telecommunications. There's going to be companies like Verizon, AT&T. You got specialty telecommunications, which is going to be companies like CenturyLink. I don't see any other names that I know. Vonage, Windstream, and then you got another sector, which is wireless telecommunications, which is going to be companies like Sprint and T-Mobile. So these are in the communications sector. And the communications sector has not been hot over the past 3 months, which means that there's a little bit of fear in this sector, and you might be able to find some diamonds in the rough. Everybody put in the comments below, diamonds in the rough. See, what I look for as a Warren Buffett long-term investor, this is not information for you guys that are like, you know, your day traders or your swing traders. I mean, you can use it, but I'm saying over the long haul, if I can buy something that's on sale over the long haul, a year from now, 2 years from now, 5 years from now, I'm pretty confident that I can get pretty sizable returns because I bought it when it was on sale. And I still believe in that company. I believe that they will rise out of the ashes and bring a nice return over the long haul. Remember this, guys. I try to tell people this all the time. And it's a good old story, a fable that we learned when we were younger, but it's this: the tortoise and the hare. And every time I read that book, it reminds me that the tortoise beats the hare every time. The tortoise beats the hare every time. Now, why do I mention that? Because there's a reason why Warren Buffett is the third richest man in the world. He's a tortoise. He's not a hare. Now, I'm not saying that a hare can't be successful. I'm just saying that the third richest man in the world is a tortoise, not a hare. So you have to decide for yourself, because too many of us are so hell-bent on chasing money, trying to get it quick, trying to hustle our way in the stock market. And all I'm saying is this: you can pay all those fees if you want. And then when you look at your statement and stuff at the end of the year, all I'm trying to tell you is at the end of the day, the book that I read is that the tortoise beats the hare every time. All right, so let's take a look here and see what's going on here. That's what's going on in your pre-market info that you need to know as we are your market recap. Now let's take a look at the pre-market info that you need to know heading into March 30th. This wonderful Thursday. Oh, here we go. So, shares in the sport. I got this wrong yesterday. I missed this badly. I didn't miss it personally, but I did miss it in my prediction. But shares in sports apparel firm Lulu is under strain extended training. They fell about 17% after the company predicted its sales would drop this quarter, which makes sense, right? Because people are, they get super excited at the beginning of the year, and then about 3 months into the year, they like, I'm not working out no more. So that makes sense. But I wasn't expecting them to show an outlook. Sometimes the outlook or the guidance is what kills a stock. So they said their sales will drop this quarter. The corporate, according to the CEO, is its closed don't pop online. So they don't have a strong online presence. Lulu will launch more colorful clothes on its website as soon as next week to tackle the problem, he said. So again, this kind of goes back to retail and where retail is going. Retail is all about the online experience. Everybody put that in the comments below. The online experience. We see it happening. We're a part of the trend changing. And the question is, are we going to recognize the trend? Are we going to follow the trend? And are we going to profit from the trend? Again, we see the trend happening. We are a part of the trend. We participate in the trend. The question is, are we going to see the trend? Are we going to follow the trend? And are we going to profit from the trend? Why are you, brother or sister, trying to open a brick and mortar store when brick and mortar retail is dying? It makes no sense. Why are you trying to go into brick and mortar stores just so you can have a piece of property? Now, if you're going to do it, okay, let's just go back. If you are going to do it, brother or sister, what I would suggest that you do is go into the retail brick and mortar to own the building and own the land that's under the building. Now, that gives you two things. You're not just having a store that you have a brick and mortar lease on that you're going to die out in 2, 3, 4 years. You actually have real estate. So you're in two businesses at the same time. You own real estate and you have a store out of which you own. Then you can do a lot of things. You can sublease. You could open that thing up to do some for events to come in. You can do a whole bunch of stuff when you own and control, not just your business, but the real estate. We got to take our level of thinking up. Brick and mortar is dying. We see it. We participate in it. It's all about the online experience. So if you, brother or sister, think that you're going to buck the trend, think that you're so special, that you're just going to have everybody coming to your store, that is naive. That is ludicrous. People are not leaving their house to drive to your store anymore. They are saying, hey, can I shop online? What is your website? So if you, brother or sister, have a store, then you don't have an online presence, what the hell are you thinking about? What are you thinking about? So you need to take it to another level. Look at what's happening. Amazon, huge online presence. eBay, huge online presence. Now, I'm not saying you need to be with them. All I'm saying is you need to have an online presence if you want to compete. See, all right, let me just move on. I can do this all day, but you know what? They pay me for this, and you are not, so let's keep moving on. All right, the corporate, according to the CEO, the shares in Sweden retailer H&M also is slumping. Another retailer, also slumping by about 4%. Europe as investors expressed their disappointment with the company's latest earnings. The firm also announced it's launching a new brand called ERGJ later this year. Stock market overview is a ho-hum day for global markets. The U.S. stock futures are holding around their closing levels from Wednesday afternoon. European markets are standing on relatively steady ground in early trading. Most Asian markets ended the day with losses, though the drops weren't too dramatic. This follows a mixed day of trading, with the Dow dipped 0.2%, while the S&P 500 and NASDAQ had small gains. In economic news, the United States Bureau of Economic Analysis is releasing its updated GDP, or gross domestic product, report for the fourth quarter at 8:30 this morning. Economists expect the GDP grew by 2% in the quarter, up from an early estimate of 1.9%. Mexico's economy is also in focus. We're getting back to talk about Mexico. The central bank meets to consider raising interest rates one more time. It has already raised interest rates 3 times as part of a contingency plan to stabilize the crashing peso following President Trump's election. So we know that Trump and Mexico don't get along, and because of that, the peso has taken a poop. And they're trying to stabilize their economy while they're still dealing with not only just interest rates, but they're dealing with whether they want to be a part of the NAFTA, whether they want to continue this free trade agreement between Mexico, Canada, and the United States. This is big stuff. We're talking about, again, everybody put comments below. We're talking about a trade war. This is what's happening. This is what's coming down the pipe. I don't know whether you can see it or not, but we're talking about a trade war. See, good old United States, US of A, wants to dominate in every facet of trade, of import and export. If you bring something into this country and you're going to pay a tariff or a tax, and because Trump is like, hey, you're going to pay even more tax because he thinks he's the tyrannic ruler of the world, there's going to be a trade war. Other countries are going to be like, hell to the no, and then there's going to be a war. I'm just telling you what's coming down the pipe. Every time a Republican is in office, there is a war. And this war is going to be based upon trade. So don't be fooled by all of these. They're going to create all of these, this fear in the market. They're going to create enemies. They're going to create different entities that don't exist, like ISIS. They're going to create these things to have you and I distracted off what is really going on, which is a trade war. Almost every war has been about resources. That's it. It's been about land, territory, oil, diamonds, gold, resources. It had nothing to do with terrorism. I don't know why you guys think that, but it's been about resources. It's been about wealth. The more that you own and control, the more you can dominate the global economy. If y'all don't know by now, the US of A is all about domination. All about domination. All right. I had to look over that. What did I miss? Did I miss something that happened in London? I don't know. I probably missed that. So the GDP is going to be released in a day. Now, here's some other things I found news. Obviously, we talked about Lulu, 17% nosedive. After hours, after the company predicted sales would drop, it's closed, then pop online. We just talked about that. Companies' problems aren't all internal. Lulu faces intense competition from companies like Nike, which is more than 10 times its size. So Lulu has been very popular, especially in women's athletic gear. We'll see if they're going to be able to recover. But a 17% drop is actually a pretty good thing if you are a bargain shopper. Because Lulu has just, I mean, a 17% drop is almost historic in one day. So that's going to be an opportunity to probably capture some, especially a short-term trader, to capture some profit on the bounce back, because 17% is just insane for it to drop that much. The company did not lose 17% worth of value overnight. Okay, let's just keep it real. The company is still a good company. They didn't lose. They didn't just all of a sudden become 17% less valuable. That's overreaction in the market. So if you are a short-term investor, you can probably capitalize on the return or the bounce back of Lulu on the coming days. I would say between Friday and Monday. But that's going to be for you guys that short-term. I just gave that to you free of charge today. Jeff Bezos, who is Amazon CEO, is now the second richest person on earth. Jeff Bezos, who is Amazon CEO, is now the second richest person on earth. So he just passed Warren Buffett. The latest tally by Bloomberg Billionaires Index shows Jeff Bezos is now worth $75.6 billion. Now, again, I got to ask you guys this question. Many of you guys probably use Amazon. You have helped them become a big company. My question is, how many of you have actually invested in Amazon where you can actually have Amazon cutting you a check and you can participate in a profit? See, that's the difference between being a consumer-minded person and an investor-minded person. I just decided that for my life, I'm going to participate in the profits of all these big, huge companies that everyone else that we all help make rich. And I want to get rich right with them. It's called riding the coattail. It's like this. When you find the golden goose, keep the damn goose, and you'll keep gold coming to your pocket. So he added 1.5 billion to his net worth after Amazon gained 9 billion in the market value during trading hours on Wednesday. I mentioned this on Wednesday, and guess what, guys? Some of you guys missed it. Some of you guys didn't, and some of you guys actually just helped your portfolio rise on up, because I mentioned this 2 days ago, and it's exactly what happened. All right, so the company received a generous stock bump after Barclays analysts declared Amazon will likely be one of the first trillion-dollar market cap companies, and I believe they will be. Its shares hit a record high shortly after. Are you participating, or are you just helping to what's the word I'm looking for? Are you just helping Amazon to get rich, or are you participating so that you can get rich right along with them? Jeff Bezos, $75.6 billion man. My goodness. Oh, my goodness. Woo! $75.6 billion. Woo! All right. A couple other things I want to make you guys aware of, and then we'll wrap this thing up. Canadian government businesses back $150 million Artificial Intelligence Institute. Everybody put in the comments below artificial intelligence. So the Canadian and Ontario governments plan to team up with a group of businesses to invest about $200 million to fund an artificial intelligence institute at the University of Toronto. Now, again, this is news that you can use. And what I try to help people to understand is how to interpret the news. Why on earth would they be creating an institute? In other words, a college, a school to teach artificial intelligence. That tells me that that's where we need to be going. That is the emerging technology that's coming down the pipe. Artificial intelligence. And the question is, again, are we going to watch these trends change, or are we going to follow and participate in these trends and actually profit from these trends? We can no longer, as a Black community, continue to be a part of everyone else getting rich and not participate in getting rich as well. So artificial intelligence, widely known as AI, and this goes back to ET days, right? ET phone home. All right. While also known as AI, has been touted as an emerging technology with potential to transform industries from healthcare and manufacturing to financial services. Those hopes have attracted Silicon Valley companies like Alphabet or Google and Facebook, as well as banks and manufacturers to invest in AI research. My question to you, I know you guys want to talk about marijuana all day long. Are you guys talking about investing in artificial intelligence? Woo! Y'all gonna learn today. All right. And then another piece of news I wanted to make you guys aware of was ConocoPhillips is selling their oil and gas assets to Cenovus for $13.3 billion. So ConocoPhillips has agreed to sell oil, sands, and Western Canadian natural gas assets to Cenovus Energy for $17.7 billion, making it the latest international oil major to pull back from a region where high cost and low crude prices have made it hard for large companies to make an acceptable return. For Calgary-based Cenovus, among Canada's largest producers, the deal doubles its production to 588,000 barrels of equivalent oil per day, and it takes full ownership of its main oil sands assets in northern Alberta. So it seems like this is a good deal for Cenovus. They're already in Canada, and they're able to actually take control. In other words, own and control the oil sands for which they take full ownership of their main oil sands, which is where they're getting their oil. So now Cenovus has full ownership for where they actually drill. So that looks like it's a good deal for Cenovus. ConocoPhillips is trying to pull out and trying to save money while they're still going through the low crude prices. Why low crude prices? Because of supply. There's too much supply, which drives the prices down. And I think right now we're at a good spot for oil. Again, it's trading at $49 and some odd cents per barrel. So I am looking heavily into the oil sector or oil sector to find me some diamonds in the rough, because I don't think the oil's gonna be going down too much lower. I think we're in a good place to start investing back into oil, because that is what our president is all about. He is trying, when he said, listen, when Trump says he wants to make America great again, basically what he's saying is, I want us to go back to the industrial age, where we produce everything in America that is made in the US of A. So that's basically what he's saying. So that's why you see the pipeline. He wants to have oil that comes from America. Stop getting oil from Canada, or stop getting oil from Saudi Arabia. He don't care about Canada. Stop getting oil from Saudi Arabia. So he's got this pipeline going to North Dakota so they can actually ambush Canada, bring the oil over from Canada through the pipeline to United States. See, that's part of the agreement that he had with Canada. So don't think that you got to understand that Canada and United States are in cahoots. It's just that Canada is like the little sister. No one pays attention to Canada, but let's not get it twisted. They work together in order to take this North American ordeal here and become the major force in the global economy. Now, I don't know. It's like Mexico is like our little bad cousin. Like Mexico just don't know how to get right. They don't know how to get with the program. So Trump was like, man, damn Mexico, we just gonna work with Canada and we're gonna get this thing done. So when he talks about making America great again, he's talking about the industrial age, where America owns and controls everything that comes through America, and then also most of what goes out of America to other countries. Well, guys, this is ERGJ, your certified financial educator. Made you aware of a couple different options. Of course, this episode has been brought to you by True Detergent, Black-owned manufacturer right here in Atlanta area. We actually do free delivery in Atlanta, by the way. But you can order your True Detergent. You can practice what you preach by letting your dollars circulate right back within your very own community. True Detergent. Make the switch. Then also, you want to be aware of how you can buy stock for your kids. Let's not be a people who continues to talk about raising millionaires, but let's actually put them in position where they can be millionaires, where they learn early how to make their money work harder for them than they work for their money. So you got an opportunity to do that by signing up for the class, where we're going to show you different ways that you can buy stock for your kids and you get them started early earning. Learn how to earn. Well, guys, I must remind you of this, that it takes a village, but it starts with us. Let's build as we climb together. Have a wonderful, wonderful Thursday. Talk to you soon.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We will see you